Good day, my name is Bruce. Welcome to Manage Finance and Contracts. You would receive from your facilitator a learner guide, a workbook, and a portfolio of evidence. As we go through this module, there will be class activities for you to complete at the end of each module, which you'll be completing in your workbook. And at the end of this whole course, you'll be able to complete your portfolio of evidence. Let's have a look and see what are the unit standards which make up this course. All right, let's have a look at the agenda. First one we're going to be looking at is what is managing finances in a new venture. Then how to administer contracts for a new venture. So let's have a look at the very first one, which is manage finances for a new venture. And here are the course module outcomes. Firstly, we're going to be looking at how do you explain financial controls for managing a business. Also, identify and apply accounting practices and procedures. Manage business accounts and maintain business records. Then lastly, to utilize financial statements to identify business progress. Okay, let's kick off by looking at how do we manage finances for a new venture. If you want to have a successful business that is to make a good profit, you need to know how to manage your finances. A lot of startup businesses fail as even though their owners and managers are skilled at marketing or selling, they do not know how to efficiently collect the sales of money, monitor it, and also save or spend it correctly. Let's have a look how we explain the financial controls in managing a business. When you start a business, it's a good idea to plan the various ways that money will flow from you as well as into your business. As a business owner, you'll be responsible to pay the accounts as well as salaries. At the same time, you need to know how you accept payment from your customers. A bank account offers many benefits for you and your money. It's safe, convenient, also easy to save money. It's cheaper, but also can help you access credit. The skills for interpreting bank statements and operating bank accounts. An account statement or a bank statement is a summary of all your financial transactions occurring over a given period of time on a deposit account, a credit card, or any other type of account offered by a financial institution. Bank statements are typically printed on one or several pieces of paper and mailed directly to the account holder's address or via email. Please read pages 13 to 19 in your learner guide. So what are the various types of accounts that we deal with? Now, to succeed in your business venture, accurate financial records will enable you to decide whether you are actually making a profit or a loss. You'll also be able to determine whether your business is stable or whether you can expect some financial trouble in the near future. There are various types of accounts that a business venture should have, such as a cash book, a journal, a ledger, as well as a balance sheet. Now, take a commercial business as the most common organizational structure. The key objectives of financial management would be firstly to create wealth for the business, generate cash, and then provide an adequate return on investment, bear in mind the risks that business is taking and the resources that are invested. Financial management elements. Key elements of financial management is firstly financial planning. Manager needs to ensure that enough funding is available at the right time to control or meet the needs of the business. Financial control is a critically important activity to help a business ensure that the business is actually meeting its objectives. Financial decision making. The key aspects of financial decision making relate to investment, financing, and dividends. Financial concepts. As a business venture owner, you need to be able to relate financial concepts to your own business venture. And those include having startup capital, operating capital, cash flow management, profit forecasts, management of assets, as well as management of liabilities. Please read pages 22 to 23 for further on your financial concepts. Please complete class activity 1 in your workbooks. How do we identify and apply accounting practices and procedures? The whole point of using accounting software is to make your life easier by saving your time and money. Therefore, if it doesn't and you meet your legal requirements without it, you should question whether it's actually worth the effort. The accounting systems for your own venture. It should save you time because the whole process of bookkeeping should be faster, although setting up a package can take an initial time investment at the start. You should also be able to answer queries much quicker, such as, did you pay a supplier last month, and if so, how much? Some things should be semi or fully automated, such as bank reconciliation, VAT returns. Your year-end should also be more straightforward when balancing. So how does your accounting system work? First, you have a business transaction or source document, which then leads to a journal entry, which then becomes a general ledger, which goes into your trial balance, and lastly moves across to financial statements or balance sheets or income statements. Now, how to identify suitable accounting support structures in accordance with your own business requirements? There are various accounting support structures that you can use in your new venture depending on the business requirements. For example, the appointment of an accounting officer, appointment of accounting clerks, or appointment of a bookkeeper. Taxation requirements required in the administration of finances in your own venture. If you keep up-to-date and accurate financial records, you will find tax compliance a relatively straightforward exercise. If SARS happen to want to audit your business, they will be happy to see these records too. Tax rules may differ slightly into accounting rules, but it is recommended to try and keep the two aligned as much to keep your life simpler. That is, do not try to keep two sets of records. Whenever you structure, you need to be aware that the government will still require you to pay or to register for income tax, VAT, UIF or CID, PAYE, and to apply for certain licenses depending on your industry, your size, and also whether you are employing staff. Please read pages 38 to 40 in your learner guide for more information about other types of legislation. The analysis of elements of an income and expenditure statement for your own business venture. The statement of comprehensive income or income and expenditure statement shows how profitable the firm is. It measures performance over a period of time. It is also a summary of transactions between consecutive balance sheets. It also reports on what income has been earned and what expenses were incurred. Now, the statement of cash flow shows how a company obtained and has used cash. The source of cash are also called cash inflows, and users are known as cash outflows. The cash flow budget consists of two sections, cash receipts and cash payments. The cash receipts section also includes monies which you have received from your debtors, whilst the cash payments section also needs to include payments which you will make to your creditors, as well as the payments of loans, bank overdrafts, etc. Identifying payment terms and procedures relating to liabilities and to implement them accordingly. Liabilities consist of the money that the company owes to its suppliers and other creditors. They are divided into current liabilities. Those are liabilities that are expected to be settled within 12 months of the statement of financial position, that's your balance sheet date. Non-current liabilities, these are debts that will be settled after 12 months, like a mortgage bond. Please complete class activity 2 in your workbooks. Now, to manage business accounts and to maintain business records. Keeping accurate and timely financial information is the key to running a successful and profitable business for the following reasons. Please also read pages 51 to 55 in your learner guide. Firstly, it's to also look at how we monitor the success or failure of a business, provide the information that you need to make decisions, obtaining bank financing, obtaining other source of finance, budgeting, as well as preparing your income tax returns, as also well complying with your legislations. Key issues pertaining to books of accounts. The book of accounts are useful analytical tasks which would include comparing performances over time, comparing performance against competitors or the industry as a whole, benchmarking against best-in-class businesses, as well as any potential weaknesses in using published financial information to assess performances. Keep books of accounts on a monthly basis, thus ensuring effective financial management of business venture. Keeping the books for a small business involves recording all financial transactions, organizing backup documentation, as well as setting the stage for the accounting to actually begin. According to the SARS, there is no set rule as how a small business should handle its bookkeeping, as long as income and expenses are actually recorded. Please also refer to pages 57 to 74 in your learner guide for further information regarding this. Please complete class activity 3 in your workbooks. Now, how do we utilize financial statements to identify business progress? The primary financial statements of a company are prepared in order to provide information to the users of these statements to help them to make an economic decision. The income statement is basically the first financial statement you will come across in an annual report. It also contains the numbers most often discussed when a company announces its results. Numbers such as revenue, earnings, and earnings per share. Basically, the income statement shows how much money the company generated, that's revenue, how much it spent, that's expenses, and the difference between the two, that's a profit over a certain time period. Now, to compare the income and expenditure statement to the cash flow statement, the income statement shows you how the profit or loss for the period has arrived at. As a minimum, the face of the income statement shall include line items that present the following amounts for the period, like revenue, financial costs, share of the profit or loss of associates, and joint ventures accounted for using the equity method, as well as tax expenses and, of course, if you made a profit or a loss. Now, to ascertain a profit or loss is to determine your financial progress of your business. The account through which annual net profit or loss of a business is ascertained is called your profit and loss account. Gross profit or loss of a business is ascertained through trading account, and net profit is determined by deducting all indirect expenses, that's your business operating expenses, from the gross profit through profit and loss accounts. Thus, profit and loss account starts the result provided by your trading account. Now, comparing business records or financial records to business plans. After reviewing financial records, one must compare these to the budget as prepared in the business plan, so the variances are reflected on and modified to ensure alignment to the overall goals of the business. A comprehensive business plan also provides a great way for monitoring the progress of your company on a point-by-point basis. Please complete class activity 4 in your workbook. Thank you.